Depreciation can significantly reduce your taxable income and help you realize a positive cash flow sooner, especially if you've purchased a brand new house. Here's how Luke went from being in a negative cash flow position to generating a positive cash flow on his $680,000 investment property. Hey everyone, Kim Quach from Duo Tax here for another video designed to help you become a better property investor. The date, age and type of property all have an impact on what you can or can't claim on depreciation. And when it comes to brand new properties, they generally offer significant deductions. So in today's video, I wanted to share with you how our client Luke was able to improve his property income from his brand new investment property, resulting in a positive cash flow position by leveraging the power of depreciation. So many investors miss out on the opportunity to save thousands of dollars each year because they don't realize the cash flow benefits of ordering a depreciation schedule. So stay tuned to see how you can benefit just like Luke has. Before we jump into the numbers, we want to be clear that this video is for informational purposes. In no way should you interpret this as tax advice. We always recommend working with a qualified accountant or tax agent to give you the best advice for your situation. Okay. So Luke started his investment journey 1 year ago and purchased a brand new house for $680,000. The property is in an area that generally has a good rental yield, so he manages to rent it out immediately for $560 per week. He generates around $29,120 rental income per year, but has to pay about $36,576 to cover the expenses such as council rates, maintenance, interest repayments, and management fees. Thankfully though, because he's invested in a brand new property, he can claim deductions for the depreciation on the property's plant and equipment assets and the property's capital works. Let's see how claiming those deductions made a difference in his cash flow position. So, after subtracting the property's expenses from the rental income, we can see that he is running at a loss of $7,456. If he falls within the 37% tax bracket, the ATO will refund him $2,759 to offset that loss. But according to the depreciation schedule he ordered from us here at Duo Tax, Luke could claim $16,300 in depreciation in his first year. So, if the ATO considers the depreciation and loss, his tax refund is increased to $8,790. That means without depreciation, Luke's investment property would cost him $4,697 each year, which means he's now actually generating $1,334 each year. He would have had to pay $90 out of his own pocket each week. Instead, by taking advantage of the ATO's tax breaks and making a depreciation claim, Luke went from covering the loss to actually generating $26 each week. So, by ordering a depreciation schedule from us, he was able to save a total of $6,031 in his first year of owning the investment property. Ordering a depreciation schedule could really make a difference to your bottom line. It could mean the difference between being in a negative cash flow position to actually putting some money in your pocket. If you're in a similar scenario to Luke and you've just bought a brand new house, you should definitely check out how much you could possibly be saving. We have a depreciation calculator on our website that you can use, which is completely free. It's designed to help estimate and calculate the declining value of capital works and plant equipment assets so that you can get an idea of how much you could be saving. I've left the link in the description box below. Otherwise, if you would like to order a depreciation schedule, drop us a comment and we'll see if your property qualifies. One last thing to know is that a single schedule provides up to 40 years of claimable deductions. So you can continue saving money as long as you own your investment property based off the one report you purchase. And for an extra bonus, Our quantity surveyor fees are tax deductible too. So there you have it, guys. Make sure to stay tuned for more client case studies and see how claiming depreciation can boost your cash flow. I'm Kim Quach from GeoTax. See you next time.